Hey, welcome back to Two Stupid Guys Trade Stocks. I am Dylan.
And I'm Vinny.
And we're going to take a quick look, a little bit of a hot take on Nvidia. Not saying the stock sucks, but this giant increase, not warranted when you look in the details of the earnings. All right, we're going to take a look.
Two Stupid Guys Trade Stocks.
I need to be very clear here. I want to own Nvidia stock. I'm not crapping on Nvidia by any means whatsoever. So any fanboys who are like, oh, I think it should be like 150 or like 160. Okay. I think they have huge opportunities, but if you dig into their earnings report, I don't think this giant jump was warranted at all.
Fair enough.
All right.
So you love the company, you just want to pay a different price. All right, I get it.
It's too expensive, and I feel like I'm going to convince you here. Although I think you already think it's too expensive.
Yeah, suspect so.
Okay. So here's the highlights when you click on like CNBC or something. Mm-hmm. Okay. Mm-hmm. Not when you look at the numbers, just when you type in Nvidia earnings highlights on Google, right? So you see, hey, they beat EPS, they barely beat revenue. They expect first quarter sales to be a little bit higher than they originally thought. Data center revenue up 11%. They said the word AI 50 times, right? Which, by the way, that's huge. That's probably their biggest attribute was the AI aspect. That's supposed to say GAAP. I just don't know how to spell. Up 111% from previous quarter. That was all over headlines. They left out a key problem there. And then gaming is recovering. Okay? You hear all that, and you're like, ooh, no wonder they went up 12%, whatever that ridiculous jump was. Okay? Then you kind of look at some other issues here. All right? Their revenue was actually down 21% year over year. It's getting increasingly harder to say, hey, 2020 was so amazing, because then we had 2021, we had 2022. We can't just keep using that excuse. All right. The EPS for the year was down 52%. That's a lot. Gaming revenue was actually down 46%. Okay. That was for a quarter. The fiscal year, they were down 27%. So the fact they're like, hey, it's recovering, it did okay for a 3-month period. For a 12-month period, it sucks.
And they had just launched their 40 series too, their 40 series GPUs too. So that makes sense that they would have a little bit of a boom for a period of time.
Yeah, and also it's fourth quarter. Do you know what I mean? That always happens. The fourth quarter is always the best quarter for that crap. Now, gets a little alarming. Your cost of goods, your operating expenses, the margin. These are all Vinny words that he loves.
He's learned so much throughout this channel. I love it.
Yeah, no, I learned so much. Before we get into those, just real quick, I circled some very alarming things. All right. So if you look at the total revenue up here, it's 26.9, pretty much the same for 2023 versus 2022. Cost of goods, a little bit higher, about 20% higher. Operating expenses and operating income. Take a look at those numbers. That's not good.
That's a little bloat, I'm guessing there, because that's quite a large leap.
That's bad. Income after taxes, half. Net income, less than half. EBITDA, less than half. Those are huge things to look at, right? Once again, not shit on Nvidia. I'm just jealous. I just want them at a lower price. That's all. Now, let's take a look at the PE ratio, which you can make the argument, never go by PE. Look at Apple's PE in like 2013, whatever, okay, fine. Yeah. It's now the highest it's been. It's up there. Okay?
Yeah.
They're
because the
operating
E's come down quite a lot.
Huh?
Yeah. Because the E, or earnings, has come down quite a lot, so the PE would be at an elevated level. That makes sense.
Yes. Their operating margin and their EBITDA margin is at lowest levels since 2016. It's poopy. Not good.
Yet
All
the
right.
stock's up like 58% in this year.
Yes, it's up 50+%. And after the report came out, man, did they kill it. It's very confusing because the initial numbers look dope. The presentation is still not up on their investor relations site, so you have to like search for all the numbers. Now, the one cool thing, other than the AI, their cloud segment did grow. I can't remember. I think it was 11%. It's continuously getting better and better and better. That part's awesome. Okay. However, operating margin, the amount they're spending sucks. This is good. These are very confusing graphs to look at, but
Yeah.
basically, they're doing the opposite of Intel. This is GPU discrete share. So they've been consistently 80s for kind of a long time, and they're actually taking even more from AMD. AMD is now at its lowest discrete GPU sales in quite some time,
Okay.
like years.
Yeah.
All right.
I mean, that
I
makes sense. I like watching gaming computer build series, and like I can't remember the last time I saw someone use an AMD one. Basically, it's probably been like a couple months. That's just how it goes.
It's so I do have a laptop that runs on the new 7000 series. These numbers are before those came out. We don't have those numbers yet, so there's a caveat there. So I don't know. I don't think this was worth a 12 to 15% raise. I think they're getting a little bit bloated, and I know everyone's like, "Oh my gosh, they had such a good quarter. Everyone else is struggling. They even increased their sales for the next quarter for their projection."
The guidance,
I
yeah.
I just feel like now it's going to be a hard fall.
Ooh, interesting. Okay. I mean, so the thing that gets me excited about Nvidia, right, is their market position with AI, GPUs,
For
and kind
sure.
of that server-based
Hmm.
stuff, right? Really, really sexy. And we know AI is definitely a trend or a theme right now that people are really excited about, right? So you can anticipate that probably will be a trend for at least a period of time. And as the old saying goes, it's better to be the person selling shovels during the gold rush than it is the person prospecting for gold, right? They're the sellers of the proverbial shovel in this
Yes.
instance of the AI, right?
Hmm.
And it's even more kind of advantageous for them is that an AI kind of GPU is not a shovel in that who else can rival them right now in terms of producing a discrete GPU for AI purposes.
So like three solid companies, but still not really. Like they're the one thing that they're really good at is they're not letting off the gas. They have the superior market share. They spend money in R&D incredibly well. I don't care if you hate Nvidia. It's a non-starter argument. Their R&D is incredible, and they don't stop. So I mean that part's pretty huge.
Yeah, so it's a company that has attributes that I would certainly want to own. I just the hard part is figuring out what price you want to pay for it. That's always the
Yeah,
argument.
I'm like 170.
Yeah.
I think 170 I would start throwing a bunch. I sold my shares. I had I can't remember like 40 or 50 shares. I sold at 192 or 195. And now I'm doing covered puts against them at prices until I can get in.
That's a reasonable thought, though. That way you get the price you want, and you can earn a little bit of return in the
Yeah.
interim.
Just waiting.
I
I
like
could be waiting for 10 years. That could be a
Could
problem.
be. Yeah, I
Yeah,
mean,
it's not great.
there's stocks that you may just never buy, but as long as you're making a return on your money while you're waiting, I guess that's how it goes.
Yeah. All right, guys. Let us know what you think. If you think NVIDIA is overpriced or you're in it. Have a good one.
Catch you next one.